All right, let's talk about turning your crypto trading from, total chaos into something consistent. We're going to spend the next few minutes building a blueprint for that. And look, this isn't about finding some magical secret indicator. It's about building a real professional framework so you can make smart, repeatable decisions even when the market's going crazy. Okay, so picture this. You've got two traders, they're looking at the exact same Bitcoin chart. Same candles, same everything. Trader A, they're a total mess, a bundle of stress, chasing every little pump, getting stopped out over and over again. But then you have Trader B. They're calm, they're confident, and you know what? Their account is actually growing, nice and steady. So they're seeing the same chart. What's the real difference here? The answer isn't some secret indicator they bought, and it's definitely not a faster internet connection. It's not about having a crystal ball. So what really separates that steady growth from all that chaotic frustration? It really is this simple. Trader B has a plan, a structured, repeatable process that they follow on every single trade, no exceptions. And that framework right there is what turns trading from feeling like a gamble into a legitimate professional skill. That's their edge. That's the secret. So here's the roadmap for how we're going to build that. We'll start with the blueprint itself. Then we'll learn how to read the battlefield, execute with something called confluence, master our risk and reward, and finally lock in our ultimate edge, discipline. Let's dive in. All right, first up, the blueprint for success. This is where we build the foundation. And I want to be clear, this isn't just another strategy. Think of it as a complete decision-making framework, one that's designed to take all the guesswork and emotion out of your trading. Okay, so every single professional trade, everyone follows these 5 logical steps. First, you've got to understand which way the market's headed. Then you find those really important price zones. After that, you look for confirmation, you define your risk before you even think about clicking buy. And then, once you're in the trade, you manage it. Don't worry, we're going to break down every single one of these. So let's get into it. Section 2, reading the battlefield. Your very first job as a trader is to just understand the environment you're in. It's all about analyzing the market landscape before you ever even think about placing an order. First things first, you have to determine the market bias. Is the price making higher highs and higher lows? Well, that's a bullish trend. Or is it making lower highs and lower lows? That's bearish. Just doing this one simple step can literally eliminate half of your potential bad trades just by making sure you're not trying to swim against the current. So once you know the general direction, then you can map out the battlefield. You go in and find the key zones, and I mean zones, not just thin lines, where prices had major reactions in the past. These are your high probability areas, the places where buyers or sellers are most likely to show up again. And this right here highlights a huge difference between pros and amateurs. Amateurs are always chasing price. Professionals, they identify their key levels ahead of time, and then they just patiently wait for the price to come to them. That discipline is what transforms an average 50-50 trade into a high probability one. Okay, so we know the trend and we've got our levels marked on the chart. Now it's time to actually look for the trigger, the reason to get in. And let me tell you, the best triggers happen when multiple signals all start pointing in the exact same direction. Now let's talk about how professionals use indicators, because this is key. They aren't magic signals that tell you when to buy or sell. No way. They are simply tools to confirm what the price action is already hinting at. For example, if you're in an uptrend, is the price also above the 200 EMA? Great. That just confirms your bullish thesis. Indicators support your idea. They don't create it. And this brings us to the absolute core of a professional setup, confluence. This is that aha moment you're waiting for. It's when the market trend is up, the price has pulled back perfectly to a key support level that you marked out, and your indicators are also confirming bullish strength. When all 3 of those things align, that's when you have a high probability trade on your hands. Now listen up, because you could have the best entry signal in the entire world, but if you don't have this next piece, you will eventually fail. I guarantee it. Risk management isn't just important, it's everything. It's the one thing that ensures you stay in the game long enough to actually be profitable. Finding a good entry is the fun part, but managing your risk, that's the real job. Without proper risk management, you're not trading, you're just gambling with a fancier setup. You have to remember, your number one goal as a trader isn't to make $1 million. It's to protect the capital you already have. And this number is the golden rule of survival in trading. On any single trade, you should never risk more than a small, fixed percentage of your total account. 1% is the professional standard. It's Just look at the math here. This is the power of that rule in action. So, after 5 losses in a row, and trust me, it happens, the trader who's risking 5% per trade, they've lost almost a quarter of their entire account. Ouch. But the trader who's only risking 1%, they're down less than 5%. See the difference? They are psychologically and financially ready for the next good setup, while the other guy is probably smashing his keyboard, revenge trading his way to zero. And remember, the work isn't over just because you've entered a trade. As it starts moving in your favor, you need to actively manage it. A great habit is to take some profits at your first target and then immediately move your stop loss to your entry point. This instantly turns a winning trade into a risk-free trade, which lets you ride the rest of the move completely stress-free. Okay, we've covered a lot. Market bias, key levels, confluence, risk. Now let's pull it all together into one single tool that will become your ultimate edge against making dumb emotional decisions. This is it, your pre-flight checklist for every single trade. Before you even think about putting on a position, you have to have a clear written answer for each of these questions. And one of the most crucial ones is, where is my invalidation point? That's the exact price where you know your idea was wrong. This simple habit forces you to trade with pure logic and intention, not just impulse. And this is probably the most important rule of the whole thing. It is absolutely non-negotiable. If you can't clearly answer even one of those questions, guess what? There is no trade. It's that simple. You close the chart, you walk away, and you wait for a setup that actually meets all your rules. That, my friends, is the definition of trading discipline. This is the fundamental mindset shift you have to make. Your confidence shouldn't come from whether your last trade was a winner. It should come from knowing that you executed your plan perfectly no matter the outcome. Look, losses are just a part of the business. Breaking your own rules is not. So I'm going to leave you with this one challenge. What's your next move? Are you just going to jump back onto a chart and start hunting for some random trade? Or are you going to open up a document and start building the plan that could define your entire trading career? Because really, that's the ultimate goal, isn't it? To become that person in the room who has a reason for every single action they take, who operates from a well-thought-out plan, and who treats trading like the professional business it actually is. That is how you find your edge.